A. Bala, MD and CEO of Aditya Birla Sun Life Mutual Fund, joins in. Hi, Bala. Good morning. Thank you very much for joining us on this very pleasant Monday morning. I know 22,000, technically, of course, we can discuss this, but this looks great, right? One-way move over the last couple of days. We consolidated in the early part of Jan, but have taken out two new record highs and 22,000 in less than 24 hours of trading.
Yeah, I think it's a good beginning on the day of Makara Sankranti, which is supposed to indicate the prosperity for the country as a whole, because at the beginning of the harvest season. I'm happy to see the market touching a new high and forming a 20,000 index. And again, as it was happened last week, the sectoral rotations has been one of the themes we've been working for quite some time. And some of the sectors which did go through a period of consolidation and its own underperformance in the market for a variety of reasons. Their quarterly results numbers also set the ball rolling for next round of move. Definitely, I think the all-round the positivity that we are witnessing, both in the economic growth as well as on stable movement both in the interest rate and currency. And the earnings continue to remain positive. Therefore, the overall market remains buoyant.
Bala, good morning. Tamanna here, and you're absolutely right. Makar Sankranti celebrates a change of season. Are we seeing a change of season in the sense the uncertainty of what your quarterly numbers are going to be fading, global cues uncertainty also fading? Do you see a secular bull run continuing from here?
So I think looks like the momentum will continue for 2-3 reasons. One, inflation is coming under check and control, led by both the fuel prices as well as the food prices are a lot more under control. Though last week there was a marginal increase, but that should not make somebody to get worried, given the fact that it's still below the overall expectation that we had kept. Second is spending, with the good harvest season being there, the spending pattern also I think it seems to be on the rise. Therefore, the consumption-led growth also should come. And broadly, the government continues to push up their public sector capex, now leading to a major announcement coming on the private sector capex is also now beginning to come. So therefore, you'll probably find a variety of sectors doing better than in the last year. As long as interest rate doesn't go up and not going to cost them in incremental cost, we should probably see the momentum continuing. And global cues continues more favor of India, given the fact China as an economy continues to struggle and not many are have taken a large bet, are disappointed for the last year, 2023. Therefore, money is not going to anywhere other than India in a hurry. Therefore, we should continue to get that global support as well.
Looking good all over. Bala, stay with us. We've also got Vikas Khemani, founder of Carnelian Capital Advisors, joining in. Vikas, what a morning. 17% from our October 23rd lows, 1,000 points in 25 trading days, led by the large cap as we were expecting. This is significant. It's a auspicious day as well.
Absolutely. I think it is just a continuation of, the India story playing out. I think just like Bala was mentioning that, we are seeing a very broad-based economic recovery. Last quarter was the first quarter when corporate earnings were even ahead of expectations. So, when your corporate earnings are strong, when your liquidity is strong, both domestic as well as international, there's no reason why markets would sort of remain where they would be. So obviously, and I think with the Fed indicating 3 rate cuts, I see massive money coming towards India from foreigners. So if that were to come, coupled with the local liquidity, markets are likely to remain buoyant. Of course, corrections can anytime. You can't, always some news can lead to some 5-10% correction anytime. But totally, I see no reason why markets should not remain buoyant.
Vikas, hi, morning. Tamanna here, and what a morning it is. Is this now stocks reaching their true valuation? Have we gone into frenzy phase, or is there much more to come?
Yeah, Yeah, tell me.
Yeah. So my question was, is there much more to come, or are we now in a frenzy phase?
Depending on what is the time frame one has. I mean, India story is very good story from a long-term perspective, and like I said, in the journey there will be 5-10% correction all the time, but structurally speaking, India will continue to deliver 15 to 20% return for next decade. I think Indian economy will grow towards $10 billion economy over the next 10-11 years, and I think that's the journey we are looking forward. So there's no reason. Of course, there will be pockets of exuberance and overvaluations. One has to avoid that. But structurally speaking, good quality companies and all those things are looking very good.
Bala, do you think calendar year 2024 is going to be all about large caps? And as far as sectors are concerned, maybe large cap banks and large cap IT could lead the way up or continue to lead the way up?
Yeah, I think the way we put out our annual outlook for 2024, one of the assumptions that we made is given the fact that the significant rally that I've seen in the mid and small cap, and having gotten a return in excess of almost about 15-16% over the large cap, we might see a renewed interest as for the large cap concerns. So we'll see that beginning to set in, which will represent both and signally. Second is IT as a sector have gone through 2.5 years of pain period. Now, interest rate comes in 2024. We will see the increased spending coming in into the IT sectors, and most IT companies who have been changing their business model, taking into account the new age opportunity that comes in. For IT, we felt that it could outperform. Capital goods sectors will continue to do well. Automobile sectors should continue to do well. And the banking sectors, while he'll pick, but they will go through their own challenges of margins under check and rate of loan growth, given the fact that RBI has been a bit tightening. We could probably see a moderate slowdown. Therefore, it may not come in the top in terms of outperformance, but definitely the sector being the large weight in the index cannot be ignored. Therefore, we will see some catch-up in that. But significant outperformance, our own belief is, will come in the IT and capital goods sectors and automobiles.
Bala, just your take on, and you spoke about IT, you spoke about heavy industries, etc. What about the favorites that we have seen so far, which is your PSU stocks? Even today, you're seeing fabulous response in IRFC and the likes going into election year. Is this a space where you think there is more steam? Are there any specific sectors and companies that you like?
I think PSUs, I think we should see the momentum continuing for two reasons. One, they are fundamentally getting answer the question. Government to execute better most on the government spending. Therefore, it all have to reflect on the earnings of the companies. Second is some element of re-rating also beginning to happen, because most of them are trading at, say, that is assuming PSU banks are trading about 1.1 time price to book. Everything being equal, whether the three times price to book discount to the private sector is justified. So I think we see that will continue to happen, which is nothing but the re-rating. But we'll have to again be very clear in terms of segregating between a stock trading at reasonable valuations versus stock trades at a substantially higher valuations. That is where one has to be careful as far as the PSU is concerned.
Right. Bala, thank you very much and season greetings. Have a good one today. And thank you for joining us this bright and early on Monday morning. 22,000 being very comfortably held out on the index. Vikas, with the kind of rally we've seen, 1,000 points have been added in the last 25 days. Do you expect this bull run to continue at least until after general elections this year? And also, mid and small cap, most people would agree, seems fairly overpriced at this stage. Large cap is seeing some leadership, at least in the last 1,000-point rally that we've seen. Do you think the right strategy for investors now is to start taking profits in the broader markets and maybe remain overweight in the large cap space?
Well, I don't know that. It depends on the horizon of the investors. Frankly speaking, we believe in buying good quality companies at a good valuation. and stay invested for a long period of time. This kind of rotation of large cap, mid caps will happen. If you are a trader, I think it's good to do. But if you're a long-term investor, I think the idea is to remain invested, especially when this kind of structural bull market is there. I do not subscribe to the philosophy that there's a lot of overvaluation in the market. I don't think so. Of course, there are pockets of overvaluations where stocks are trading exuberance kind of valuations, but I don't see there is much wider markets in general are overvalued. We are still able to find good ideas, structural ideas. Having said that, there will always be risk. There will always be corrections. So market corrections can come anytime, which nobody can time. But if you are large cap is underperformed, I think can do well in shorter term, especially when the FI money comes in. I think this year definitely large caps will do well. But at the same time, when the money is coming in, it also percolates down to the broader market. So, yeah.
Absolutely. Vikas, please do stay on with us. Gautam Shah, founder and chief strategist, Goldilocks Premium Research, also joins us today on the show as we discuss what next and where next from 22,000. That's the question. And I think one thing to note is how steady we are staying above the 22,000 mark as well. It's showing that kind of a confidence coming in from investors and not only in the large cap stocks, to be honest. Of course, IT is the star of the day, but look at an IRFC. Up about 8.5–9% right now. Gautam, very good morning to you. Tell us what you think is happening in the markets right now. Is this markets finding its true value? Do you think it's a little bit of a hype? And do you see now a further upside or a bout of profit booking before that?
Good morning. I think, this is a market where you don't need to overanalyze. I think the price action has been as clean as it can get. We've seen shallow corrections all along. And the 2003-2000 bull market has taught me that, when the markets are having such a run, you don't really look at what kind of numbers it can reach at the top. I think what you really assess is where are the risks and what kind of levels below which there could be an issue. Not once in the last couple of years have you really broken any long-term support. So I think we've been good. And I think the domestic liquidity angle has just removed volatility, off the screen, because you have India VIX at a level of 12.5. Participation has been excellent. And I think the reason why markets have done so well in the last 10 days is because banks, Reliance and IT, all three put together have done so well. So there is no way the Nifty cannot move higher. I think this will continue, but still, I think there is a little bit of euphoria at the marketplace. So there could be rotational correction. I don't have numbers on the upside, but I think on the Nifty till we are above 21,500, we are good. And I think there are still immense opportunities in various sectors like IT, pharma, metals, chemicals, fertilizer, and one should just focus on them.
Gautam, let's take it one at a time. If there are investors who are looking at initiating fresh longs on the Nifty at 22,000, would you recommend it? And also, Bank Nifty, in terms of its participation, has been lagging behind in the last 5 to 6 sessions. Do you expect Bank Nifty to play its path, and hence would you initiate a fresh long on Bank Nifty as well?
Well, number one, I don't think Nifty is an opportunity. I think 2024 is not going to be about the Nifty. I think you might just see very measured returns there. It's going to be about specific sectors and specific themes. I mean, at best, you could see a 10% move on the Nifty, which is not large. It might seem like a 2,000-point move, but it's not large in percentage terms. But banks, as you rightly mentioned, I think is the key theme. I see a lot of positivity. Some of the underperforming private banks have come back very well, like of HDFC Bank. And our favorite in the entire space has been SBI for a while now. And I see that stock outperforming the whole of this year. So banks clearly is an opportunity, but one needs to be a little selective. But as I just said, I mean, large caps, yes, there are a few opportunities, but still the bigger opportunities in the mid cap and small cap space, because as we know, 8,000 crores is actually moving into that space every single month, something that we've not seen in a couple of decades. So that for me is a game changer, and that's the reason I feel that the momentum can continue.
Vikas, I just want to talk to you about the point Gautam is making, and an interesting conversation setting up here about a rotational correction that we may see, and that the story still remains in your small and mid caps. It's not as if it's only large caps which will give you value in 2024. Do you concur? Okay, I don't think Vikas can hear me right now. Gautam, let me come back to you in specific terms. When you say that you will see sectoral correction, which sector do you think is ripe for that kind of a correction right now?
See, corrections are healthy at the marketplace, and you need the market to keep giving back so that it can remain healthy. And we've seen in the last many years that any rally which is vertical in nature never sustains. I could take examples of what happened in early 2000s and, many such examples. So I think at this point, if you look at real estate, look at capital goods, look at the auto space, I think they've seen a parabolic move. For that matter, even the PSU space. So there could be, some pullback coming anytime soon, and we are actually advising our subscribers to take profits there. On the other hand, the other 4-5 sectors which I mentioned still look excellent. I mean, take for example pharma, take for example chemicals. I think based on risk reward, the opportunity is still quite immense. So anything that's done very well over the last 6 months, take profits and move to newer sectors.
And we'll, of course, Gautam, talk to you about those newer sectors because there are very few left right now that haven't actually rallied up. Because this leg is about IT, at least the last 2 days has been. What have you made of those earnings? The 4 biggies announced numbers, 3 were, they were in line with expectations. Also because you're...
We're getting upset.
Vikas, can you hear us?
Yes, I can hear.
Yeah, because I was asking you about what did you make from the IT earnings? Largely in line with expectations because expectations were running weak. Margins have improved, but that could be a function of efficiency, which usually happens when economies are slowing down. Attrition is declining, which happens again when business is not looking as promising. But the markets seem to have given a thumbs up. Do you think this rally is justified with IT stocks? And would you buy any of these IT stocks at these elevated levels?
We've been positive on IT stocks for quite some time. Whole of last year when markets were negative, we were quite positive on IT stocks. I think it's a structural story. Again, like I said, Indian IT services exports will go to $500 billion from 200 approximately in next 5-7 years. So if this kind of move is there, there will be many companies which will become bigger. Of course, and this now, I think probably execution cycle might pick up. With the Fed rate interest rates coming down, potentially, some more spending might come in the U.S. economy on the IT. So I think we've been quite positive, and valuations are not very demanding. So one has to do your own stock pick on that. But broadly speaking, we like the sector.
All right. I just want to get the take on what's happening with, on the IT front, or what you can do next on the IT front with Gautam as well. And just look at what run-up we've seen. Wipro is, in another trajectory right now, about 11% in trade. What would you do now with some of these counters, Gautam?
Well, I would stay long. I think that's been the view all along. And to be honest, IT is probably one of the few sectors in the market to be not trading at lifetime highs. In fact, if I'm not wrong, it's still about 7-8% from its lifetime highs, whereas every other sector in the market is actually trading at life highs. So I think the bigger opportunity is still in IT. It was underowned. I think people talked about a lot of headwinds, but given the results of the last few days, I think the sky is clearer for many of these IT stocks, and that's probably the reason a lot of institutions are coming in and buying even at these prices. So our working target for the index is about 39,000. I think we'll get there gradually, and so one should stay invested. And if one is looking to park fresh money, I think even at current levels, TCS, Wipro, Infosys, HCL Tech, Tech Mahindra, all actually look pretty good.
Gautam, you said there'd be newer sectors, and we've seen sectoral rotation take place. I mean, RIL was one of the biggest contributors in the last 1,000-point move we've seen on the Nifty. Real estate, that was a huge underperformer, has played enormous amount of catch-up. IT as well, like you said, was lagging behind in terms of valuation, is doing okay right now. What's next? So if an investor comes on today or a trader comes on today looking at fresh longs or fresh trades, what stocks, sectors would you advise him to go long on?
See, our focus is very clear in the form of IT, pharma, metals and chemicals. But I think if you have to really look at risk reward, which I think is extremely important at a 22,000 index, I think metals and chemicals offer you the same. In fact, chemicals as a sector has done nothing over the last 18 months. I hear that things are picking up on the ground and the charts are also very well placed. So I think many of the top stocks, Aarti Industries, Deepak Nitrite, SRF, I think are big opportunities, fundamentally super solid companies with very good charts. So this, I think, for fresh investors looking to park money, chemicals, and if you look at the metal space, a Nalco, a SAIL, a Tata Steel, a JSW Steel, I think they have a lot of room on the upside. So fresh commitments can be made there as well.
All right. Thank you so much, Gautam, for speaking with us today. It's a big day for the Indian markets, and we've had a variety of views coming in here from top experts.